Nobody seems to be noticing what is currently happening to natural gas, as history is currently repeating itself. And so, to understand the latest price action of this commodity, in today's video, we discuss the most important technicals, fundamentals, and also macroeconomics of natural gas. Let's first have a look at the daily chart. You do obviously have this long stretching channel here, this blue channel, and we've recently actually had a bearish breakout to the downside here. We've seen that volume delta has been decreasing. It's currently at neutral levels. And we've seen happen similar things to cumulative volume delta. And so we do have this massive decrease in momentum. We are seeing this breakout below this $3 support level, which you can beautifully see here on the hourly chart. And so we're currently still on this trend line of the falling wedge that we've actually invalidated here recently, but we've actually broke below this $3 support here and are now retesting this trend line here. And so if you have a look at the VRVP at volume, you do see that a breakout to the upside could actually happen, considering the fact that this has been a fair value that we've seen a lot of volume trading in, and that is always one of the signs that you have to have for a potential breakout to the upside, because those have been prices that actually coincided to a lot of volume, and so they have probably been fair values, and we obviously suggest that this could actually be a upcoming reversal to the upside, especially considering the fact that those stops have been liquidated, which obviously would also suggest institutionals are now able to enter the market with liquidity. Now, this is just one potential scenario. Whether this is actually about to happen, whether this bullish upwards trend here to those resistances is actually about to occur, is a question that we can only answer by taking a look at the past cycles to learn from them and to understand the underlying drivers of this commodity. And so let's have a look at a really interesting chart. But before we do that, I would like to emphasize that we would really appreciate you to subscribe to our channel and hit the subscribe button, not only but also the like button. Also make sure to comment down below if you have any questions or just want to give us your opinion on the markets right now. Yeah, thanks for your support. Now let's have a look at this chart, which has actually been suggested by Benjamin Cohen. And this chart is basically nothing else than the S&P 500 divided by the US unemployment rate times, or US unemployment rate squared times the US inflation rate year over year times the US interest rate times the M2 money supply. And if you do that, you actually get this chart, and it beautifully shows you when the last few recessions hit, that this chart has been going to the downside by a lot. We've seen that this correlation that this chart is showing you here is actually always signaling recession risks when this is going downward. We have seen that those last few recessions that are indicated with this with those red areas right here, they've all coincided to this big decline in this ratio. And in fact, we have seen that big decline happening once again, which obviously would suggest we could see a deeper recession happening in just a few months. Now, you have to emphasize that those tops have not really coincided to the recession yet. Also, this time, we haven't seen a top actually already signaling the beginning of a recession. It takes some time until we do see this recession actually hitting. And this is beautifully showing you that we might just see a recession in the next few months. Historically, that chart always predicted those recessions. For example, predicted the recession that we've seen here in the 80s, the recession here in the 90s, here with the dot-com bubble, with the great financial crisis, and also the Corona crash has been signaled by a falling signal here, a falling ratio at this chart. And so this obviously would suggest we do see history repeating once again. And let's have a look at this at those past few decades here for natural gas and understand the correlations that we tend to have with certain ratios as well. Now, what you're currently looking at here is the natural gas weekly. you are seeing the copper to gold ratio, you're also seeing the gold to S&P ratio, and they've always coincided quite in quite a certain way with the natural gas prices. We have seen before previous crashes, which are all indicated by those lows here and with those orange bubbles. We have seen that actually concerning the copper to gold ratio, we've had this negative correlation at first, which then turned into a positive correlation. In other words, we've seen a divergence before the crash happened. We have seen that natural gas prices have been trending higher. We've seen that coincide to the copper to gold ratio falling. In other words, we've seen gold already starting to outperform copper. Now, when this recession actually occurred, when natural gas prices actually fell significantly, we've also seen that the floor was removed here at the copper to gold ratio. We've seen that scenario repeat several times. You can beautifully see those divergences at the beginning here with those blue trend lines, and then eventually we do see natural gas prices free fall, and that actually marked a lot of sell-offs and also some recessions here, in this case the great financial crisis and also the COVID crash. Now, additionally, we are also having the gold to S&P ratio, which is quite similar, just that we are now reversing here. We are now having gold in the primary spot here and the S&P in the secondary. And so this is just showing you that whenever we start to see that gold is outperforming the S&P, that this is also a signal for recessions. We've seen that happen, for example, here previous to the great financial crisis. We've actually been in a phase of consolidation before, and then eventually we've had this bullish reversal. We've seen that bullish trend form out, and eventually that actually led to the great financial crisis. It indicated the great financial crisis, and also that was a pattern that repeated several times here. And whenever you do see that growth slowing down, whenever you do see that gold starts to outperform not only the S&P but also copper, that is a really significant warning signal to our eyes at Chronos. And in fact, if you have a look at what we are currently seeing, you are currently seeing this divergence. You're currently seeing that divergence with the copper to gold ratio and also the natural gas prices. You're currently seeing a gold S&P upwards trend. Gold is outperforming the S&P for quite a while now. In fact, the overall high with the S&P measured in gold has actually been quite some time ago. If you invert this, you can see that the high has been here in 2021, and so you do see that we're in a bear market here, where if you measure the S&P against gold for quite a while. And so that shows you the dollar's delusional effect, as we are actually seeing a bear market for quite a while if you measure the S&P in gold. Now, this is really important to understand at this point, that this bull market is at the end of this liquidity cycle, almost ever inflationary, and it is driven by a dollar devaluation. And if you do see that reverse, you do tend to see that the DXY starts to strengthen, and that you do start to see a deflationary crash happen. Now, concerning the latest price action here for natural gas, we have obviously seen the invalidation of this $3 support. We're currently sitting at $2.8. Concerning the fact that we're seeing volume delta and cumulative volume delta also going to neutral levels again, we're not really seeing any kind of breakout potential at this point. However, if we do see that aggressive buyers or sellers are actually entering the markets here, we could see that first signals actually appear to the upside or to the downside. Now, at this point, we are obviously having a quite interesting structure here. We are having this massive fair value gap here to the upside, and in fact, we could actually see a bullish breakout in the next few days. However, if you concern the long-term trends of natural gas, we are rather bearish. We do expect to see this actually end in a long-term bearish trend. Whether we do see a breakout here or not, that is quite hard to predict. But in the long run, we at Chronos are rather bearish concerning the empirical data that we've just assessed. We might see a breakout here to the upside as we are currently retesting this support of this trend line here below $3, however, but at the same time we do have a long-term downside potential being valid and being still in concern to us at Chronos, since we have just assessed this historical data, which is definitely showing you that there is a lot of downside potential. It seems like history is currently repeating itself, and so we might see a breakout to the upside here in the short term, but in the long term we are quite certain at Chronos that this might not end well, that we might see a deeper macro correction here in 2026. And this is our primary thesis here at Chronos. If you like this approach of taking a look at the past cycles, if you appreciated this video, thanks for your support by watching it. Thanks for subscribing. Thanks for giving us a thumbs up. Also make sure to comment down below and also check out our Discord server, which is also linked down in the comments. Thanks for your support. See you the next time. Bye bye.